Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about how to create a dividend portfolio just using three great companies. And using these three great companies, you are going to get paid dividends each month. And this portfolio is under $600 to start. So if you're interested in what kind of companies we're going to put together to create this dividend portfolio, sit back, enjoy. Hope you like this video. If you are new to the channel, hopefully by the end you will subscribe. Don't forget to hit that notification bell so you don't miss out on the videos that I put out. As always, please remember this is not financial advice. This is just me sharing. Without any more delays, let's take a look at these companies. So the first company that I'm talking about is Iron Mountain. The ticker symbol is IRM. This is a company that deals with storage and informational management solutions. So if you go to their website, you can see a little bit more about their services, such as data centers, inventory management reporting, and you got some IT and security shredding. So take a look at their website and see a little bit more about it. So let's go on to tip ranks. Based on their price target, they rated as 58. At the time of this video, it is at 55 with a 4% upside. 12-month forecast rated as a high of 58, an average of 58, and then the low of 58. And their analysis rating is 1, which is a moderate buy. Now, if we swing to Simply Safe Dividend, based on their dividend safety score, they rated as 50, which is borderline safe. The dividend yield is 4.47. This is a large cap with 16 billion. Looking down to the key metrics, you can see payout ratio is about 68, which is very low for a REIT. Looking down to the dividend growth, last 10 years, 10% per year, which is fast. Last 5 years, 4%, which is slow. And then latest is very slow. But if you look at the dividend streak, 11 years uninterrupted without a reduction. There is no dividend growth for the past couple of years. Now, for payment details, you will get paid quarterly in the months of January, April, July, and October. And your annual payout per share is $2.47 per share, which breaks down to about $61 cents. Focus on this one with the monthly payment. So we're going to put that all together towards the end so you can see how that plays out. Now looking over to some of the financials, you can see sales growth right here, total sales, and then you got your investment on return capital, 7%. Return on equity is about 38%. Now, if we go to Simply Wall Street, based on share price and fair value, they rated as fair value is about 189. Currently is about 55. So they calculated that based on their use a discount cash flow model, which is calculated in 70% undervalued. Looking over the overview, you can see some of the rewards and the risk right here. Earnings are forecast to grow 13% per year, trading at 70% below estimated fair value. So the next one I'm going to talk about is British American Tobacco. Ticker symbol is BTI. This is a company that distributes and sells tobacco products. If you look down the website, you can see a little bit more information. Now, if we go to NASDAQ, you can see based on their analysis, they rated a strong buy based on 4. And you can see some of the companies in there, JP Morgan, you got Jefferies, Cohen. And then now if we swing to Simply Safe Dividend, based on their dividend safety score, 45, which is borderline safe. Dividend yield is 7.21. Looking over to the key metrics, you can see payout ratio is 61. Dividend has been increased during the recession. Looking at the dividend growth, you can see the last 20 years 10%, last 5 years average, 22 years on uninterrupted dividend streak, and then 22 years of dividend increases. And then you get your payout details. Quarterly, in the months of February, May, August, and November, your annual payout will be $2.85 per share, which breaks down to about 73 cents per quarter. Now, if we swing by to the PE ratio, you can see 8.7. Consumer staples is about 20. A little bit more down, you can see the investment return on investment capital. You can see 8%. Return on equity is about 8. And you can see a little bit that it just went up on, if you look at 2017, that's 109%, and then after that it just went down. So something to consider. Another thing to consider as well is your 10-year growth, negative 24% for the past 10 years, and then you got negative 36%. But if you go to Webull, you can see based on their analysis, they're rated a strong buy, which is 100%. Then you got your price target of a high of 55, average of 54, and a low of 54. So the last company is Broadcom. The ticker symbol is AVGO. And so this is a company that develops and supplies semiconductors. So this one is a very popular company for a lot of dividend investors. So if we go to tip ranks, their price target is in 674 with a 34% upside. 12-month forecast rated as a high of 775, average of 674, and then the low of 620. And then their analysis rated as a strong buy, 11 rating, all 11 buys. You can see going to the stock analysis, the smart score 9, which is outperform. Hedge fund holdings have also decreased, but they're strong buy and bullish, and retail investors are positive. Now, if we swing to Simply Safe Dividend, based on the dividend safety score, they rated at 67, which is safe. And then your dividend yield is 3.26. Looking at the key metrics, you can see payout ratio is 47. Looking at the dividend growth, look how crazy this is. The last 10 years, 44%, which is very fast. The last 5 years, 43%, which is also very fast. You can see right here 11 years of without a reduction and 11 years of growth. Your payment detail quarterly in the months of March, June, September, and December. And then your annual payout is $16.40, which breaks down to about $4.10 per quarter. Now looking at the returns, so you can see return on investment capital. You can see a huge jump from 2021 to the last 12 months, 21%, and then you got your return on equity from 28 to 45. Now let's look at bar chart, and based on their price target is in the high of 750, and then the target of 669, and then the low of 540. And then you got your analysis for the past 3 months. Pretty similar, strong buy all around. You look at the breakdown, you can see only 3 holds, but you got 12 strong buys. And then swinging at Simply Wall Street, based on share price and fair value is at 651. Currently is about 502, 22% undervalued based on their analysis. Okay, so now how are we going to put this all together? So you got your 3 stocks. At the time of this video, these are the price. Your dividend payments right here from January, April, July, and October for IRM. For BTI, you got February, May, July, August, and November. And then for AVGO, you got March, June, September, and December. So totaling all of this, if you were to start with just one share each, your total would be 597. For each of these, you can see your payment details over here. IRM about $2.47. BTI would be about $2.85, and then AVGO payment details, payment of $16.40. So if you continue to create your portfolio to reach 100 shares for each of these, for REM, if you buy at least 100 shares, you will get dividend payments of $247 per year. And then this is for BTI, $285, and then AVGO, $1,640. Now, if you add them all together, you will have a total of 2,172 dividend, just dividend payments. So something for you to think about. This is just an example of creating a portfolio that pays you dividends per month. So hope you like this video. Give it a thumbs up. As always, please remember, this is not financial advice. Also, check out my other videos as well. There's other videos with great dividend companies that you probably want to see if that's a company you want to invest on. Please be safe out there. Stay cool. Keep investing. And I'll catch you guys in the next video, right? Take care. Aloha.